This is EZRA, your accountancy teacher. May God bless us all with all His blessings. Now, let us see journal entries. My dear students, if you are thorough with these journal entries, how to prepare journal entries, it will be very useful, and the subject accountancy will be very interesting for you. For that, you have to be very keen in watching this video. And first of all, you must know the accounting cycle. This one is called accounting cycle. What do you mean by accounting cycle? You might have studied in your biology that natural cycle. What do you see there? Insects will be taken by rat. Rat will be taken by snakes. Snakes will be taken by eagle. Like that, at the end, again it will come to the beginning. Likewise, in accountancy, this is the cycle. We start from journalizing and end with the preparation of final accounts. Again, we have to start in the next accounting period. You have to start from the journalizing. That is why this one is called accounting cycle. See, journalizing is the first step in the accounting cycle, and let me tell you one by one. From journalizing, journal entries will be taken to the book called ledger, and in the ledger we make balances, and from these balances we prepare trial balance. TB is the abbreviation for trial balance, and after preparation of this trial balance we prepare final accounts, and only in these accounts we come to know about the profit or loss of the business in a particular accounting period. And balance sheet, in this balance sheet we show all the assets we have in the business and all the liabilities of the business. So this is the accounting cycle. Now let me tell you one by one. First, you must know the meaning of journalizing. You know, at the beginning itself I have told you that all transactions should be recorded. Where will it be recorded? Where will they be recorded? They will be recorded in the book called journal. Journal is the book in which all transactions will be recorded, and this is also called book of original entry. And the process of writing the journal entries is called journalizing. Let me tell you, all transactions will be recorded in the book called journal. That book is also called book of original entry, and the process of entering all the transactions in the book journal is called journalizing. And journalizing is the first step in the accounting cycle, and preparation of final accounts is the last step in the accounting cycle. These two one words will be asked. Journalizing is the first step in the accounting cycle, and preparation of final accounts is the last step in the accounting cycle. And from the book journal, these entries will be transferred to the book called ledger. Ledger is a book in which all the transactions from all the entries from the journal book will be transferred to, and ledger book is also called main book. And let us deal these things in the forthcoming classes. Now let us learn journal entries, how to prepare journal entries. Remember, all transactions will be recorded in the book called journal, and at the same time we cannot record as we like. There is a method, there is a procedure. In that procedure, we have to write all the transactions. Before understanding how to prepare journal entries, you must be aware of these three things. One is type of accounts, and accounts involved in a transaction, and golden rules. These three things must be known to you if you want to become a master in journal entries. First, let us take types of accounts. Before that, you must know the meaning of account. In your book, it is given in a different way. You need not worry about this. Let me tell you in a simple way. See, I am drawing salary every month. It means only once in a month I get money. Whereas I cannot give money and get things in a shop every time. So what do? I approach the shopkeeper and keep an account for me. What does the shopkeeper do? He will put my name at the heading, and that will be divided into two parts. And in one part, he will be writing all the borrowings. If I buy something means that will be recorded in one side. Suppose if I give money means that will be recorded in the other side. At the end of the month, he will add all my borrowings and he will compare my borrowings with the amount which I have given to him, and he will finalize the amount whether I have to give him or whether he has to give me. This is called the account. And what do you mean by account? Now listen to me. An account, transactions of the same items will be recorded under one heading called account. This will be enough. You need not know more than this. Just understand the meaning of account. Okay. Now these accounts will be mainly divided into personal and impersonal. What do you mean by personal accounts? Accounts which are related to persons, human beings, are called personal accounts, and other accounts are called impersonal accounts. And personal accounts are further divided into three. One is natural, and another one is artificial, and the third one is representative personal. Now let me tell you and explain the personal accounts first. Remember, personal accounts means accounts which are related to persons. Let us take natural persons. All human beings will be considered as natural persons. For example, Vijay, Ajit, Surya, Nayandara, Tamanna, all are natural persons, and these are called natural accounts and artificial. And I have given our school name and Indian Bank, Agaram Trust. These are called artificial persons. Why do we call these as artificial persons? See, the persons may come and go, but these things will run. For example, if the management changes means the school will be running even after the change in the management. So these things will be considered as persons, and for these persons the authority will sign. How do they sign? These institutions, these banks, these trusts will have a common seal. If that common seal is affixed and it is signed by somebody else, it is considered as the seal of CMHS, seal of Indian Bank, and seal of Agaram Trust. And so these things are called artificial accounts, artificial personal accounts. Natural person accounts, you can easily understand this. This one is nothing but in the place of persons, institutions will come, business will come, and representative personal. See here, capital. If you are not unable to understand representative person means just only 6 things are there, and keep these 6 as representative personal. Let me try to explain that. Capital. Actually, capital means the amount invested by the owner. He gives money to the business. In the previous classes, we have studied that the person who supplies capital should be separated from the business. He must be separated from the business so that we can do problems, sums. And capital is introduced by a person, but instead of writing his name, we write capital. So capital represents the person who gives money, but we write under the heading called capital account. Likewise, drawings. In the beginning itself, you might have studied the meaning of drawings. Money or in kind taken from the business by the owner is called drawings. And the person draws money from the business, so his name should be written. Instead of writing his name, we write drawings account. Likewise, outstanding expenses. Suppose a person works under me and I have to give him salary. Suppose instead of giving 12,000, I have given him 10,000. So remaining 2,000 should be given to him. Instead of writing his name, I write outstanding salary, and outstanding salary represents the person to whom I have to give salary. And prepaid expenses. Sometimes we employ persons. We may give in advance. That is called prepaid expenses. Instead of writing his name, we write prepaid expenses account. And accrued income. Still we have to collect this income. That is called accrued income. Suppose we receive rent from our tenants. So if he fails to pay 1 month rent means that is called accrued income, and that is an asset. And instead of writing his name, we write under the heading accrued income. And then income received in advance. In the same way, income received in advance means commission received in advance. We have conversed with him that a particular work will be done. For that, he have to give me commission. Before doing that work, if I receive money means that is called commission received in advance. Instead of writing his name, I write income received in advance account. So again, let me tell you, personal account means accounts which are related to persons. And this is divided into three, that is natural person, and it will be easy to understand. Artificial person, institutions will come under the heading artificial. These will have common seal. When these common seals are affixed, that will be taken as the sign of these signatures of these institutions. So these are called artificial personal accounts and representative persons. Remember, instead of writing the person's name, we write these things, and these six will be termed under the heading representative personal. Now let us come to the impersonal accounts. Accounts which are not related to persons are called impersonal accounts. This is divided into two, real accounts and nominal accounts. Real means assets. You know the meaning of assets. Properties which we have, that is called an asset. And these real accounts can be divided into two. It means assets can be divided into two. One is tangible asset and another one is intangible asset. What do you mean by tangible assets? Assets which can be touched and realized. See, machinery we can touch and realize. Furniture we can touch and realize. Building we can touch and realize. These assets are called tangible assets. Assets which can be touched and realized are called tangible assets, and these will come under real accounts. And another one is intangible assets. There are some assets which cannot be seen and touched, but that can be realized. Very good example is goodwill. Now suppose if we want to get a baby soap, how do we ask the shopkeeper, give us one Johnson's baby soap? Actually, it should be asked baby soap. Instead of asking baby soap, we ask Johnson's baby soap. Likewise, let us take JCB. Actually, the machinery is proclaimed. Instead of calling it like that, we call it JCB. This is the goodwill. It means the value of the good reputation is called goodwill. They have created the good name that is valued in terms of money, and that is called goodwill. And patent rights. What do you mean by patent rights? You cannot touch, remember, goodwill that cannot be touched, but we are able to realize that. So goodwill is an intangible asset. And another one is patent rights. What do you mean by patent rights? Suppose if you invent something, that should be registered with our government, and they will issue a certificate. Others cannot produce your others cannot use your inventions. That the money value is called patent rights and copyrights. Suppose I write a book, nobody can publish except without my permission. That right is called copyright. And here I must give you one information, that after the death of that particular author, after after the completion of 60 years, anybody can publish those books. And let us recollect what do you mean by real accounts. Real accounts are related to assets or properties, and those properties can be divided into two: tangible and intangible. And tangible assets means which can be seen and realized, touched and realized. Intangible assets we cannot see, we cannot touch it, but we can realize those assets. Now let us go to nominal accounts. Nominal accounts means expenses and incomes are regarded as nominal accounts. Expenses, the money spent to maintain the business, to run the business, to make profit are called expenses. Several expenses are there, and most of the expenses: salary, rent, taxes, electricity charges. These are expenses. And remember, here I must tell you one thing. Suppose if it is given rent 3,000 means you have to assume that rent is paid. You should not assume. There are two possibilities. If rent is means rent can be received or rent can be paid. Whereas in our accountancy, if rent alone is given, you have to assume rent is given, rent paid, and incomes, interest. Suppose if we invest our money in fixed deposit like that, we may get interest. They are incomes. Likewise, commission. If you do something, then they may give us money. That money is termed as commission. So these are the accounts. So accounts are classified into three: personal, real, nominal. Personal accounts again be divided into three, that is natural, artificial, representative. Naturally artificially representative, only 6 things are there. Real accounts means which are associated with the assets. Assets can be divided into tangible and intangible. Real tangible assets which can be touched and realized. These assets cannot be touched, whereas realized. Nominal accounts, expenses and incomes are nominal accounts. Shall we recollect what we have seen in under the heading journal entries? Remember, journal entries are very, very important. If you are thorough with the preparation of journal entries, you can easily succeed in accountancy, and this will be helpful throughout the life. And this is the accounting cycle. Journalizing is the first step in the accounting cycle, and the preparation of final accounts is the last step in the accounting cycle. And what do you mean by journalizing? Writing the transactions in the book called journal is called journalizing, and journal book is also called book of original entry, ledger. It is also called main book. Now to write the journal entries, to know the journal entries, to know how to prepare journal entries, you must know these three things: types of accounts, and accounts involved in a transaction, and golden rules. These things can be learnt in the forthcoming classes. Let us stop with this. By the grace of God, let us meet in the next class.